Hey everyone, it's Evan here from the Trade Risk on Wednesday, April 12th, here with a midweek market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. So happy Wednesday, happy hump day. Markets are starting to move just a bit here today away from all of this chop that we've been in for the past 5 or 6 trading days. So let's get into the action. S&P 500, the SPY ETF, finished lower, minus 0.39% on the day. And before we even look at this daily chart, let's kick it up one notch here. Let's look at the weekly and zoom in just a bit here. You can see not a whole lot has changed. We're still consolidating on the weekly time frame. We are in a long-term uptrend here that started from this latest pivot down here in November of 2016. We've had a brilliant run higher, and for the past 6 weeks we're consolidating. We're below the 8 period, which is now flattening, and still above the rising 20 period here on the weekly time frame, and not much has changed. Again, consolidating, very healthy action, nothing to worry about. This picture still looks good here on the weekly chart. Can that change? Absolutely, but for now it's more so it's just a snooze fest consolidation with not a whole lot going on. Now on the daily time frame, a little more actionable. There's some levels here that we can start to look at and pay attention to, and really it was today that gave us that movement to pay attention to. So if we back it up just a few days, remember last week, I think Wednesday here, this was the crucial day. We had this inside day on Tuesday. Wednesday we gapped up, made a run for the highs here, tried to break above this trend line. We failed, reversed, closed near the lows, and that set up this sideways chop, which just continued into the end of the week and into Monday of this week. Tuesday yesterday was an interesting day. We had a attempted sell-off intraday that got us all the way down to about 233.30. That found some support, found some buyers. We reversed into the close. Today, no follow-through to the upside. So, in fact, today we actually came back down and we had an inside day. Today this is an inside day, and we came back down and sort of just closed certainly more weakly or more bearish here than we did yesterday, down just around 234. So where does that leave us? It's very messy in here still, but we're starting to break down from this range from last week to the downside. And if you look at the 8 and 20 period exponential moving averages here, you can see they're bearishly aligned, starting to open up just a little bit, which means a little bit of momentum starting to build here on the downside. That puts sellers in control here in the short term. Now, it's still a messy range. The long term is still healthy. The weekly chart's still healthy. Can we recover this tomorrow? Can we start to pop back above 235? Absolutely. I think there's other scenarios. I know people, or I see a lot of comments basically saying like, are we going to go to all-time highs? Or are we going to have that 10 or 20% pullback? There's a lot of in between those two scenarios. So even if we do continue to roll over here, it can be slow. It could be a very sort of gentle retest of these lows down here from March, and we can find some support, pop back up, and we can consolidate in a wider range, and something that's not just chaotically pulling back or ripping to all-time highs. So I think there's a lot of in between. There's a lot of rotation and opportunity that you could still find, but for now I think you have to certainly respect the fact that we are losing these lows in here. Once again, if we start to reclaim 235, which could happen as early as tomorrow with a gap up and a nice little kind of false move down here, then we're back to this tug of war range with a more neutral bias, and potentially even bullish bias if we can start to reclaim these fast moving averages and get back above 235. So until that happens, let's respect the slight breakdown, the gentle breakdown of today, if you want to call it. Again, daily chart, tactical players, tactical participants is who I'm talking to, and sellers are in control, in the very slightest sense here, as long as we stay below that 235 level. Keeping it very simple, that's the way I'm looking at it. It's noisy, trying to just remove the close attention and look at the longer term sort of structure that's at work here. So that's the S&P 500. If we go to the IWM, again, it's it's so noisy in here. It's just almost not worth the effort to pay much attention to it until we really break below 134 or back above 138. Otherwise, just very noisy, lots of movement back and forth. We're closing low. We reversed yesterday's all of yesterday's progress. In fact, took out yesterday's lows. So closing low. Let's see again if the sellers are committed here. Can we get a close below 134? Otherwise, this is all sort of just noise. You can see the 8 and 20 period bearishly aligned, so you got some momentum that can still build there, but we still really haven't been able to see a significant close below 134 yet. Once that happens, that's something that's pretty, that would be a very telling and important structural close. And on the NASDAQ 100, you can see starting to roll over here as well. The 8 and 20 starting to get that crossover. If we get another day or so of softness, that'll happen. And you can see we're starting to just kind of roll over. We're breaking some trend lines, and we've slowly been consolidating or moving sideways, flattening out, losing momentum, however you want to sort of frame it, over the past few weeks here in the Qs. So definitely some softening action all across the board here. Let's see now if there can be some actual momentum that builds on the downside. So that's what we're going to be looking for heading into the rest of this week. Now with that, let's get into some of the other major markets here. TLT getting that close above this, what is this now, 5-month or so price, 5-month highs, getting that close above this trend line, above all these recent highs here. Momentum trend short term continues higher. Weekly chart, we know, this was certainly damaged here. We're above the 20 period, we're above the 8 period. This could continue to cross over back to a bullishly sort of aligned trend here if we see continued strength here in the short term. So constructive action, we lifted above this consolidation here, and we're starting to make some progress. That's nice work there by those bond bulls. If you're in there, you have the trend on your side here. You have some clear stops you could use below this structure or below some of these fast moving averages. A little bit of an uptick in volume. Things look pretty good there in TLT. Next, if we go to the metals, we'll go to gold, which is seeing a nice move higher from this consolidation, breaking above this trend line here. We discussed that a bit last week, and you can see some nice volume coming in the past few days as it starts to extend itself, getting back in motion here to challenge sort of the November highs before this violent breakdown. If you remember from mid last year, September, October, where we saw that sharp move lower in GLD, which kind of set up that trend into the end of the year. So getting back to those recent highs, things look good here. Bulls in control, volume and uptick, 8 and 20 period moving up. All looks pretty good there. Silver, quickly, we talked about last week how this was a pretty loud bearish engulfing day here, and you could see we did close this gap, and we found a bit of a hammer here on Monday of this week. We saw a nice continuation yesterday, and then we got the breakout here today on Wednesday. So we're back above this trend line, perhaps a little inverted pattern here that you could look for a measured move higher. Silver, just like gold, got some momentum there to the upside. USO down just a bit today, but really has had a brilliant run over the past few weeks. Has bounced very sharply off this rising trend line here from late March, and made it all the way back up to retest this breakdown level, already get back into this supply and retest all of this supply that we consolidated in for the beginning of the year for the first 2.5 months or so. So a very impressive run, pulling off just a bit today. I mean, it could, very easily or favorably used a bit of a pause here. Let us consolidate, pull back just a little bit, let these moving averages catch up, develop some small continuation consolidation, and look for a continued move higher. That would be certainly the ideal situation from a trader perspective to try and get involved in this. Otherwise, it's really just tough to do much with this right now, to either bid it up here or try and aggressively short this. So it's still a wait and see in my book. Longer term, it's still in a bigger holding pattern here. So I'm certainly going to be paying attention to it, but it's clearly had a big move. A little bit of a pause would be nice. Natural gas, This one here, had also been just grinding highs ever since the end of February and into March. You could see we were just kind of moving higher in this kind of steep channel here, and we just started to break down from it yesterday. In fact, was our sort of day one breakdown as we came back in and retested this 20 period, moved sideways, held green today. That is encouraging, but still be interesting to see if the bulls can hold on here at this 20 period and get back inside this channel, or if we can put in some type of higher low if it needs to pull back a little bit more. If you've been waiting for an entry in natural gas, something to pay attention to right now as it starts to pull back. So I'll be watching it, but I'm not seeing too much for me just yet. And I think that's everything. I don't know if I'm missing anything, but let's move into sectors. We'll start with the downside first. So semiconductors. The most concerning right now, these have been the leaders for as long as, almost as long as I can remember at this point, and we're starting to break this channel here that's been neatly in place since November, even arguably earlier than that, of last year. But you can see we're below this trend line here, which is encapsulated price for the past 6 or so months. We're below the 20 period. The 8 period just curled back underneath the 20 period, and we've got a strong uptick in volume over the past 2 days as we've started to break down here. So certainly a breakdown. It's going to be interesting to see how deep this gets. Again, if you look on a weekly time frame, this is certainly just barely a blip here, a much needed sort of pause and retest of potentially a 20 period on the weekly chart. So that's how strong things have been here. We haven't really seen any weakness in price. We've been above the 8 period moving average since July of 2016. So it's been a very impressive run for the semiconductors. So this is a welcome to pullback here, I think, for potential long-term continuation of this trend. But I'd respect it. I'd be careful jumping in already to sort of buy it. With a recent breakdown that arguably happened, Tuesday, Monday of this week. Give it some time to just let it settle in, especially with this uptick in volume. Let's see if we can, just let it kind of settle, maybe put in a higher low, maybe down to 75, 72, 74. You can put your retracements on there, look at some prior levels. But for me, I'll just be, looking at it from a distance here and letting that dust settle before aggressively looking at any entries there at this point. XLI also getting hit pretty good today, down almost 1.4%. You can see came back up, tried to reclaim the 65.35, 65.50 level where we found some support throughout beginning of mid-February and March, and we just kind of rolled over here. So you got to wonder if we're going to put in kind of a second leg lower, maybe come back down to these January lows. That would certainly be the bearish scenario, or we can start to stabilize here. Maybe this is a single day shakeout. But industrials on the weak side today, definitely on the lagging side. Materials also similar situation. We talked about the strength in materials last week, or in the midweek's videos. We talked about how this was kind of holding up here near highs. Really wanted to see if it could break above 52.85. It made a couple of attempts. This was last Wednesday, that reversal day, but then it quickly stabilized on Thursday and Friday above the moving averages. But then coming into this week, it just started to weaken up, and then today we're seeing that move back down, looking like it wants to come back down and retest sort of the bottom end of this range. So a little more caution now is advised. We didn't get the materials breakout. There was strength there, but today certainly changing the dynamics there. IYT also with a breakdown back below this 162, 163 level, which was the January lows. So you could see if this wants to come back down and retest the recent lows here. Transport's looking a little more vulnerable once again. And then financials also, kind of looking vulnerable again here, or at least retesting support. Look at all the sell volume that's kind of been building up here. Something to pay attention to if you've been looking for entries into the financials. But again, you'd still want to respect this downtrend. A little more convincing momentum lower here in financials, but it is retesting a level. Let's pay attention to it there. XLF, I think, will be interesting towards the end of this week and see how it closes out the week. On the upside, on the resilient side, we'll start with healthcare, which again, if made the note here that I've been watching closely, you can see actually ended flat on the day today, looking like it wants to try and stabilize here. Some of the individual components perking up a bit today. I think we took an entry in one of those ourselves, but continues to move sideways. It had this downtrend, it had this pullback here below the 20 period. You can see it's still bearishly aligned to 8 and 20 period on the daily chart. So still a reason to maybe, let the dust settle. Let's just see if this actually holds in here. But XLV staying fairly resilient, all things considered, and specifically biotech, which was again green today. And this is generally seen as a much more volatile, higher beta industry, and these guys were holding up today. You can see the support in here on the IBB right around 285, 288. This general area is holding for now, which is constructive, and I think it's a big win if the bulls ultimately do hold here and start to lift higher back up towards that 300 level. So something to pay attention to there, with a little bit of relative strength developing in IBB, XBI, XLV, and then your classic defensive sectors are just holding up, continue to hold up. XLU coming back to these recent highs here. It's been consolidating in this nice little box for the past month and a half or so. And then XLP, the staples, also consolidating very similar fashion here in this nice tight sideways range for the past month and a half. So defensive sectors starting to get a little bit of a lead there. Some of those risky and prior leaders like semiconductors starting to roll over a bit over these few coming days. So that is the recap for this week. Hopefully you guys enjoyed it. Hopefully you had a good day trading. If you like the videos, be sure to subscribe to the YouTube channel. Thanks so much for watching, and talk to you again soon.